Hey everyone, welcome back to the channel. Today we're diving deep into XRP, and I've got to start with some absolute gold from Jack the Rippler that honestly changed my entire perspective on crypto investing. The golden rule of XRP investing. So Jack dropped this truth bomb about what you should learn from market crashes, and it's pure wisdom. He said, don't use leverage, don't use margin, don't use debt, don't pair trade, and stop trading. The only way to make it is to buy, hold, and get rich. And you know what? I couldn't agree more. Here's the thing. Everyone thinks they're the next crypto genius. They're going to short XRP here, long XRP there. But guess what happens every single time? XRP does the exact opposite of what they expect, and these traders end up losing everything. The secret sauce? Just buy it and hold it. Stay patient and you will get rich. It's really that simple. Major market movement alert. Now, here's where things get really interesting. We just saw a massive $42 million XRP shift that has everyone talking. This move sparked some serious speculation about banks and Ripple's ISO edge. So here's what happened. XRP is facing some uncertainty as this $42.1 million moved to Bitstamp. But, and this is huge, banks are getting ready to embrace Ripple as the fastest, most efficient path to ISO 2022 readiness by November 2025. The banking revolution is coming. Remember what I said in my video just the other day? Banks are going to onboard to ISO through Ripple because Ripple has the quickest path to get there. I actually showed you that clip where they demonstrated how they could onboard banks to RippleNet in about 3 weeks. And honestly, I think they can do it even faster now. Bill Morgan drops truth bombs. Now, this comes from Bill Morgan, and it's absolutely mind-blowing. You see, there are people out there pushing the Chainlink narrative. Even during the recent crash, people were still spreading FUD about XRP, saying banks will never use it, Swift doesn't want XRP, blah, blah, blah.
But here's what Bill Morgan pointed out that absolutely destroys that narrative. BNY Mellon will be represented at Ripple Swell 2025. But that's not all. We're also seeing Citi, BlackRock, Franklin Templeton, Fidelity, JP Morgan, CME Group, Moody's, and DBS Bank, plus many others. Think about this for a second. You don't see all of these massive institutions showing up to Ripple Swell unless they're seriously looking at Ripple as their solution. This isn't a coincidence, people. Why XRP was chosen long ago? Here's something most people don't understand yet. Ripple and XRP were chosen long ago to be the future. The writing has been on the wall this entire time. So why are all these Wall Street giants showing up to Ripple XRP Swell? Because XRP is becoming the bridge for global finance. We're talking tokenized real-world assets, ISO 2022 rails, stablecoin integrations, and even ETF whispers, all happening at once. You're early, but here's the thing. Don't sleep through the signal. You know, there was a time when I constantly said, you're early, you beat the institutions to crypto. And that was true. Tokenization hadn't boomed yet. We didn't have regulatory clarity. But now, the door is closing fast. We're literally on the verge of getting clarity by the end of 2025. ETFs are going live very soon. I think it's going to be fast-tracked once the government reopens. ISO begins next month. That's how close we actually are. All those banks, all those institutions, they know they're going to need a bridge for all these assets. Even if the banks create their own stablecoin, they still need a bridge for that stablecoin. And that's exactly why XRP will be the world's bridge currency. The Swift versus XRP debate. Now, let's talk about this whole Swift taking out XRP narrative. Financial coach JV shared an honest opinion that really breaks this down perfectly.
What he wants to point out is the difference between messaging and actual value movement.
Everyone keeps pushing this chain link narrative, saying Link is going to eliminate all the friction in payments and settle all these transactions. But here's the reality. That's just not true. You still need something that actually takes out the friction. That's exactly what XRP was built to do. Plus, XRP and RippleNet don't just talk about settling, they actually do settle transactions. But here's what's really fascinating. It's not just about messaging and settlement. Ripple is actually going to work side by side with SWIFT initially. But here's where it gets interesting. You're going to have countries that don't want SWIFT at all. They're just going to go full-on RippleNet. And over time, those countries are going to get the upper hand because they're moving money faster and cheaper. So other countries will start onboarding to RippleNet. And this will continue happening until Ripple eventually replaces SWIFT. It's going to be a transformation more than a full-on replacement, happening gradually over time. Massive institutional shift coming. Speaking of transformations, institutions are set to boost their digital asset allocations to 16% by 2026. But honestly, I think this is going to be at least 50% by 2028. I can tell you that right now. Everything is already moving ahead. These institutions want exposure to blockchain and AI. They're investing in the fourth and fifth industrial revolutions at the same time. So of course, this is the next big thing, and we need to get positioned for it. We've got to make money off this while we still can. And that's exactly why this will happen sooner rather than later. Because once one country onboards, or once one company or institution onboards, all the other institutions have to do it. Why? Because now these early adopter institutions are going to get the upper hand on all of their competition. Why the crash actually helps XRP. Here's something counterintuitive. The crypto crash will actually reinforce most of Wall Street's money flowing to larger cap blue chip American crypto. Choose wisely.
I think an interesting thing here to also mention is that this almost exclusively happened on the perp order books. It didn't happen on the spot order books. And there's a reason for that. First of all, a lot of these, you'll notice this didn't happen with like XRP or some of these older kind of alts that are still popular. A big reason for that, in my opinion, is most of the alts that were affected had like 2 to 3 market makers that were designated market makers for that token. According to what I've heard from a bunch of people, it became just absurdly hard for market makers to actually place orders. And because there's only really at scale like 3 companies placing bid and ask orders on the book, all of a sudden, none of them can place orders. So the price just becomes, no one's setting price. The price in theory can go to almost nothing. So I think that's what you probably saw with Atom. It looks like a smaller market maker also blew up. So like, if you look at Resolve and some of these, I'm forgetting the exact name, but it's something like Cyant or something like that. It's like, or like not Cypher, but it's similar. They basically, their entire Hyperliquid account got evaporated, and all the coins that they were market making basically almost went to zero. And so I think that's also part of it, but most of it I think was market makers not being able to trade.
And so what does that indicate? Is it like a skill issue, or like why?
It's not in the case of market makers going down, it is a skill issue.
And that's exactly why they'll choose to go with the bigger cryptocurrencies like XRP, most likely ETH, Bitcoin, and so on. Because if you don't have market makers, you see what happens. Everything crashes down to literally nothing. But here's what's interesting. This didn't really happen with XRP. Even retail investors got really screwed during the crash because there were a lot of people who couldn't sell even if they wanted to, and you couldn't buy the dip because all the exchanges and trading were down. Everything went into a standstill.
XRP holders are built different. But XRP holders? They did not panic. In fact, yesterday was a very calm day on the XRP ledger comparatively. Transactions per second were slightly higher, wallets weren't hammered, and people were just chillin'. XRP folks are built different. If you're an XRP holder and you've been holding XRP for any period of time, I know all of you understand what you're holding. I've prepared you for everything leading up to this because I've educated you on what XRP is built to do. I've even shown you the darker parts of XRP, how it has ties to the elites, how it's already going to become the future, and how it was chosen a long time ago. But that's exactly why it's going to succeed. Why true XRP holders never panic. You know, XRP is built to move anything of value. So whenever you see a dip, you're not rushing to sell because you know where this goes from here. But there are a lot of people out there screaming, "Oh, the sky's falling, sell your XRP, blah, blah, blah." But if you know what you're holding, you will hold on to this cryptocurrency for dear life. They would have to pry it from your cold, dead hands because you know you're holding a winning lottery ticket. The historical pattern repeating. This comes from Coach JB, and it's something I've touched on multiple times in the past. They need black swan events to destroy the small exchanges, the same way they used the 1929 crash to destroy small banks. History repeats itself.
Back then, thousands of local banks were wiped out overnight, consolidating power under the Federal Reserve. This is no different. The system uses fear and collapse to monopolize control. First, they build up the hype, then they pull the rug, crush the independence, and introduce regulated solutions. You'll soon see ads from traditional banks offering to custody your crypto with words like institutional grade, regulated, and safe. Same game, just a new form of money. That's why I stay calm. I don't chase hype or fear. I buy the red, I sell the greed. Conviction is the edge most people never develop. The hidden inflation attack. And while people argue about markets, inflation silently stole 11% of the dollar's value this year. Your account balance didn't change, but your purchasing power did. When you understand the system, you stop reacting emotionally. You play the game differently. Here's what I think is actually going to happen with the exchanges. Regulations are going to cause a massive bottleneck. Any exchange that isn't doing proper KYC and AML, they're done. They're finished. They'll be closing up shop, and a lot of people will lose their crypto. It'll look like a black swan event. But the reason they're going to do that is because right away, they're going to back the banks. All of a sudden, the banks will be offering crypto options to earn money. They'll custody your crypto for you. They'll put your crypto to work for you. Here's the difference. If you do these things yourself, you will make a lot more money. But if you allow the bank to do it, you will make a lot less money. Because the banks still want to collect those fees. The exchanges will start to shrink, and the banks are going to take over the game. I could see that coming a mile away. This comes from Cyprus, and I'll leave this here for the ones who think staking is great. If you're staking crypto thinking it's passive income, think again. Inflation is eroding your yield. You're paying taxes on rewards, and your dollar-denominated returns are shrinking. Especially if the yield outpaces inflation, and you're taking your rewards and looping them into more yielding positions that are not dollar-denominated, and instead are assets that appreciate against dollar depreciation. Major universities with valid research show something else, which is why people should research instead of listening to random people on Twitter. This aligns with crypto's role as inflation-resistant stores of value. Do your own research, people. Pro tip: smart passive income strategy. By the way, here's my professional courtesy. Here's what you need to do when you start generating passive income. Don't convert it to US dollars. Take your passive income in a stablecoin like RLUSD. This way, you're getting the passive income by putting your crypto to work for you, but you're cashing it out into a stablecoin that also has yield opportunities. So if you're going to hold money in a stablecoin like RLUSD, you're still going to get that 4%.
But if you take it from your passive income into a bank account where it's denominated in US dollars, it's only going to lose value. Plus, you've got to pay taxes on that passive income. It's going to be a lose-lose-lose situation. Instead, earn the passive income, take it to the stablecoin, reinvest some back into whatever cryptocurrency you're using to get that passive income. You're non-stop earning, you're beating inflation along the way. I hope I explained that clearly, because I wanted to simplify it as much as possible. RLUSD passes major stress test. Speaking of RLUSD, XRP, RLUSD, and the XRP ledger just passed a $19 billion market stress test. What they're pointing out here is crucial. The XRP ledger and RLUSD held up very well during this crash, and we knew that was going to happen. They said, be assured, XRP and the XRP ledger isn't going anywhere. Volatility is part of the journey. And while mid-market volatility hit other stablecoins like USDE, BN, SOL, and WBETH saw price depegging, which caused forced liquidations in positions, RLUSD faced its first stress test since its launch in December 2024.
And guess what? RLUSD held up strong, maintaining its USD peg amid the market crash. Like I always told you, RLUSD is going to emerge and become the #1 stablecoin in this space. We know it's fully backed, we get the audits from Ripple, and we know it's not going to lose its peg. European regulatory advantage. The European Banking Authority just warned of risks during the transitional period. What they're saying is that a lot of companies come in claiming to be MiCA compliant, but they're doing it through a workaround called passporting. This refers to companies trying to get regulatory approval in one country they perceive as having less stringent approval mechanisms, so they can legally operate in other parts of the EU afterwards. They're going to crack down on some of these companies as well. If you cannot fully pass MiCA regulations, most likely these companies are going to be kicked out of the EU as well. But we know Ripple is fully MiCA compliant, so there's nothing to worry about with Ripple going forward. In fact, I think Ripple is already positioned to become the money mover for the digital euro. I think the digital euro will run across RippleNet eventually, and most likely XRP will be moving it. Final thoughts. But at the end of the day, as XRP holders, it all leads to us getting rich in the end. And until it happens, stay patient. So there you have it, folks. XRP isn't just another crypto. It's positioning itself as the backbone of the new financial system. The institutions are taking notice, the technology is proven, and the timeline is accelerating. What do you think? Are you positioned for what's coming? Drop your thoughts in the comments below, and if this video helped clarify the XRP picture for you, smash that like button and hit subscribe for more crypto insights. Remember, buy, hold, and stay patient. The future is closer than you think. See you in the next one.